Hello, Warriors. How's everyone doing today? Taweed, hello. Welcome to Face. Welcome to the best FX financial webinar on the net. Shooter, how are you? Everyone doing okay? So when I was talking to Scott and some of my guys over the weekend on Saturday, and we were hearing the S&Ps, and I was probing it last week, you know, whole team, all these negative divergences, thought I had it here, and he had a couple of sales around 33.89 and one at 90. So we were discussing, how deep is this break going to be because it was a pretty lousy close, and we had confluence of these two speed lines right here, which had held on Friday. So I was thinking, oh, maybe 32.50, 32.20 for the first leg of the break. And I said I thought it'd be compressed in time and be somewhat of a mini panic. But I really didn't expect us to get all the way down to really the market from last night's low. This is your throwover line that it's held. I would say under this low, it's game over. So I was thinking we'd get here after, maybe an A, B, C, pretty deep impulsive wave here. So I think we will get a bounce, but closing back under here, everyone see it's a megaphone. Remember when everyone was looking for a megaphone top, and then we had the throw over, and then we retested the throw over and just, kind of ran over all the bears. So we're there, and closing back within the megaphone would not be such a good sign for bulls. Everyone get that? Give me why if you understand what I'm saying here. I think it's very possible that if we start closing under this low, the surprise is really going to be to the downside. So it really has to make a stand here. And as you can see, so far we've had a little two drive formation right to the line. Okay. So here's a confluence on shorter term. So I don't think we're going to blast to new highs, but we should get some type of fib retracement. Even if we get one more low, I wouldn't short it because you have a little three drive formation here. But you know what? The beta's too high for me to trade it. Okay, so you notice with that kind of break, there wasn't a mass exit from the dollar. And actually, the metals peaked. I mean, this was a three drive in silver. I admit I was waiting for a three in gold. I only got a two. So to me, what looks to be a better way to play it is since the dollar really didn't get hurt that much, if we get a recovery in the S&Ps, dollar could rally again. I look at the dollar here on the daily, we had a confirmed high. 4 hour kind of looks like a flag, doesn't it? These are pretty high momentum readings. So I'm looking for above par in the dollar. Oh, Sean, you're unbelievable. All right. Yen, do or die, too, from yesterday's low. Doesn't it look that way to you on a daily? Do or die. So we took out 110, but remember, this was a pretty big pivot here, this 109.70 level. And so far, it held it pretty ugly week, but held this 200 there. So I would say back under this green moving average of 50, the yen will be vulnerable too. So, but if we're going to get a pop in S&Ps here, and you are a bear, and you want to lead on a breakdown, I don't know. I'm not as bearish as I was for months. Hardly getting rewarded, hardly getting rewarded. Looking for the big break that never came because I was bullish bonds, and bearish yields and constructive bullish gold. So never got the break in the end. So, took me to task on this candle. And I'm just not ready to short it because, one of my rules is markets rarely peak when they're confirming the highs. Okay, and we definitely confirmed the highs. It just leaked and then accelerated with the stock market, but I don't know, I can't get too bearish. There's one question on oil, and I remember our interview with Steve Anton. You guys, think that I'm bringing our guests in just for you. Well, I don't know about you. I do stick around for the interviews because I host them. But I bring in some good people and they lay out some good ideas. And just because they leave doesn't mean I forget those ideas. Okay, so Steve Anton, who I consider a very good trader, was talking about a breakdown towards 47 crude, which I could see that happening for some type of counter trend trade. And it might be a big one because if we get this breakdown here to 47, this sure wasn't much of a retracement. I thought we could get to 56, but I'm going to wait for that level and see if we get it. There's nothing I see RSI wise here yet. So I'm just going to wait for sub 50, maybe around the 47, 48 level and see what's setting up. Okay. And I'm going to turn it over to Blake now. What's going on? Anyway. Oh my gosh. Yeah, Blake found one of the most unique.
There's an inside joke, folks. Good morning.
Yeah, in case we run out of masks. That's a great idea.
Yeah.
They said we only have 300 million, so there'll probably be a run on the
so hold on. I have to show everybody that. It's pretty funny.
Yeah.
Somebody from my office just sent this over to me, so just give me a second.
They're no good if they're edible.
So this is from my office.
Yeah, blame it on them, Blake.
That's the Berlusconi's got his mask that he's that they're issuing out in Italy. So just
Latin lovers.
Yeah. Definitely prepared for the coronavirus outbreak. Sorry,
great.
That is funny. Okay.
Should be in white though, due to
Why?
medical reasons.
Oh. All right. Anyway,
oh man.
What about making money so someone will give us a pair of those to put over our face?
So let's first of all, some news hit regarding the euro. Germany they're suspending some debt, and from what I understand, it's municipal payments or municipalities are borrowing money to pay down their debt. So it's not really fiscal spending, but the euro at first, when that news came out, it popped above the 109 level. And I think, you still have a lot of people short. So they, got squeezed and then, we reversed back down again. Some of us in the chat room, we've been shorting the Euro Aussie, Euro New Zealand as stocks have, hit this, what I think is at least a near-term bottom for today, but the Euro New Zealand hit the 127% extension. If you use Forex Analytics, you knew that, because even if you weren't in the chat room, and let's say you were just a light version user, you got the update this morning. It says the Euro New Zealand is at the 127% extension with a 4-hour RSI overbought, which may be due for a pullback. And that was at 172.87. We're trading in the 60s now, as we've come off. I actually think that, if the equity markets have bottomed here temporarily, and don't mince my words here. I think the S&P may find a low for today, and you know maybe even for the remainder of the week. But right here, we might come off, towards 172. Find some support at the breakout area here. You know what I mean? That seems logical to me. For especially after the spike up in the euro. The euro Aussie also just hit these highs, and it's reversed a little bit. Now, a couple things I want to talk about regarding the euro Aussie. Well, it would be the Aussie dollar. So the Aussie is at an important support. I'm not necessarily a buyer of the Aussie dollar, outright, because the Aussie, if you look at the price action, the Aussie, it has just been nonstop bludgeoning of this pair as we've drifted towards the 127% extension. However, relative strength is very divergent. We are at 127% extension of the last move higher. That's the October lows to December highs. If I just made you yawn, that was totally my fault. Sorry about that. So
I
the
blame you.
Aussie, I don't know if it's really going to find some support here, but it might just slow down. But if the euro, comes back down towards 108.50, and let's say the Aussie just, maybe bounces back to 166, that means the euro Aussie will trade, 50, 100 pips lower. So you got to watch the Aussie dollar as we're, nearing these levels of support. So that's another thing that I've been watching this morning. I'm not, like I said, I'm not long the Aussie per se. But I am trading, some of the crosses a little bit. The cable, super big rejection. But I know a lot of people are like, "Well, what about the pound?" I'm not. I don't know how you trade the cable right now. Honestly, I mean, what do you do with it? Because yesterday, the cable looked so strong, and then today we just reversed, and that's typical when you're in the apex of a wedge, which it seems like to me we are in this apex of this slightly descending wedge. I don't know what to do with it. Well, let me put it to you this way: since I don't know what to do with it, I don't do anything with it. So, if I was to trade the cable, which I'm not, I'd be buying down here at 128.50. I'd be selling up here at 131, or 130, 20. And while you're in the middle of this apex of this wedge, why deal with it? There's no edge while you're sitting right here. Nothing. There's nothing to do. In my opinion. So the cable's just been whipping around, and if you're trying to trade like the euro sterling, as an example, this currency pair has been all over the map. I mean, you're like, okay, well, we're hitting resistance. Just take yesterday, we're hitting this 84 level resistance. So you go short, and you make a few bucks, and then all of a sudden it's you're like, okay, I'm gonna gun for this breakdown. Then all of a sudden it just whips right back past the resistance, stops out everybody short, and then comes off again. And so it's like, what do you do here? My opinion is probably a whole lot of nothing. Just sit around and wait for a better trade to develop. I think in the cable, I don't know if there's anything really to do regarding the cable at this point. Like I said, there's no edge. One thing I want to bring to your attention, though, and one thing that I wanted to talk about is, we discussed this yesterday regarding bonds. So the bond market is at really what I consider very key resistance this week. Let's go over to the weekly chart. So as you can see, this is a multi-year trend line. So this is 2012. This is 2016. That's 2020. So here we are challenging really key resistance, right? Now, if you think that yields are going to rally from here, meaning bonds are going to stop, and then bonds are going to sell off again, and yields are going to rally. What is your what is your play at this stage in the game? Well, I think the play is, if you are playing yields to the upside, is you want to be long the dollar yen. Now, if you look at yesterday's price action in the dollar yen, let's talk about that for a moment. And the dollar yen, and this is a weekly chart, so this is fine. I'll start here. So if you notice, we broke this big triangle resistance last week, right? Huge. It was a massive breakout. Everybody was like, "Oh my god," And what we did is we came down yesterday and retested that trend line at the 110 level. Okay, we just came down, retested the trend line, and we've found support around the 110 level. Big buyers there yesterday. I mean, there was what we call in our office, when we're looking at bids or offers. It's an iceberg bid or an iceberg offer, when there is just a nonstop bid in the market and it just doesn't disappear. Like, there's just a buyer that they keep refreshing and you can't get past it. So yesterday, before we hit fresh lows in the S&P, there was an iceberg bid at the 110.01. As is that 110.01. They must have bought a yard of currency easily, and of dollar yen. And then they finally left towards the end of the day, and we slipped from this 110 level down to 109.90, and then bid back up again. And as you can see, all night we've been just kind of firm here. Now, the fact of the matter is, there was somebody buying a massive amount at 110 yesterday. And if you think about, like, buying a yard of currency and where we're currently at right now, that's a good trade. All right. So for whoever was buying yesterday, and like I said, they were buying massive amounts yesterday, massive. Now, what we've got here in the dollar yen is we've kind of broken this downtrend line. Personally, I think the dollar yen is going back to 111. That's where I think it's going. I think we're going to retest this, 50% retracement here, maybe even to the 618 to 111.30. I think that is now doable in the dollar yen. Okay. Now, here's what, if you're going to trade the dollar yen, this is what you should be looking at. And this is my opinion. All right. Actually, let me take this. Let me go over to the yield. So let's go to the 10-year yield. If you're following via TradingView, it's US 10Y. All right. This is the 10-year yield. This is a 1 hour chart. Let's go to a 15-minute chart. There's a 15-minute chart. Now, you want to trade the dollar yen? Again, you got to go back to my conversation regarding the bond market. If you think that the 10-year bonds have peaked and yields are going up, Stelios, where are you?
Hey, I'm here. Hi.
Yeah, I'm calling your name right now. Okay, so
Counting the money.
If you think that bonds are peaking and yields are going to go up, this is your 10-year yield. Now, match that to the dollar yen, and what do you have? You have the exact correlation that you should be looking at. So if yields start to rally, which, by the way, if you watched yields last night, they plunged, broke lows right here, and now they're at risk of rallying. So if they rally and they break out in the 10-year yield, you've got to be long the dollar yen, looking for, like I said, move back up towards 111, maybe 111 and change. So I think that's the setup today. And let me finish off by saying that it's not just yields, and it's not just the bond market that I was talking about. Let's talk stocks really quick. Okay. Let's say I'm right and the stock market's a little oversold and we need to bounce, which I really think we do. I actually think the stock market will recover today. We're going to spend probably the next few days bouncing around, consolidating these losses. Do I think the stock market eventually breaks down? Yes, I do. Do I think that the stock market will bounce before it goes down? Yeah, I do as well. So if you look at the daily chart of the S&P, we are finding support at this long-term. You see this long-term trend line here, right there, right? Long-term trend line, 161% extension of. Let me make sure I've got the right fib. Yep, right here. That spike low in January, two highs, 161% extension overnight, and we are consolidating right here. Okay. I actually think that we rally back to like, if I had to imagine what happens over the next few days, we do this, and then eventually break down, right? That's if I had to guess, that would be my best guesstimate on what happens with the S&P over the course of the next few days. We've had this massive sell-off. We are probably a little oversold here, and we start to consolidate, and then eventually, break down through this trend line. All right, as the coronavirus continues to grip the globe, and remember, as coronavirus it is a global slowdown issue. Regardless of if you think it's going to plague your area or you think it's going to get worse from a cases death toll standpoint or not, what it has done and what it will reverberate through the market is that it is slowing down the global economy to a standstill, to a point where you take like my kids' school. They're obviously very proactive. They're preparing for studying from home. That doesn't mean that they're going to enact that, but they're making the preparations. Look,
out of curiosity, what does it mean studying from home?
Well, I mean, I hope that we don't get to that point, but really, at what point do you get to on a global scale where everybody just kind of, all right, well, we're not shopping, we're not spending, we're not really moving anywhere, other than to get necessities, to get some groceries or to gas up our car, go to I don't think we're going to get to that, but who knows? The fact of the matter is there's a lot of the world that's already, getting to that point. So, where lockdowns might be more normal, just from a preventive standpoint. So with that being said, you got to think that I think the global, equity markets are going to continue to take a hit, but we probably will consolidate here. Now, if I'm wrong and we breach today's overnight lows, that's when the poop hits the fan. Okay. So the poop hits the fan at that point. That's when we go into serious meltdown territory. Because if we start breaking these lows, then we're probably going to break 3,000 and really start to come off here in a serious manner. But I don't think that happens today. I hope it doesn't, because man, that would be a sight to see. But yeah, look at equities right now. They're popping. Did you guys catch the news overnight about Hong Kong? Hong Kong's issuing $1,200 per person in spending.
We talked about that. Didn't we talk about that possibility yesterday on the webinar? Not for Hong Kong.
I don't know. Did you? Not with me, but
Steve, yeah. But no. You were here. We were Stelios mentioned helicopter money, and then we said that it's something they were looking into when they were afraid of a double dip recession in 2011.
Yeah. Well, Hong Kong's, doing it obviously between the riots and the coronavirus. Now you got a situation where, being, I watch YouTube. That's where I get a lot of my, I watch YouTube, and I have my, my things that I'm into. And there's this one YouTuber I watch. He's a financial guy in Hong Kong, and he's pretty much holed up in his, in his apartment, in his, skyrise apartment. The dude does really well. Cool guy, but he's been, and it has nothing to do with coronavirus or nothing to do with, the markets. It's, just a YouTuber that I watch, from time to time. And, he's been talking for months about how, the Hong Kong economy has just gone to an absolute halt. Well, just think about that. Like, when you've got months now of people not doing anything in Hong Kong. When I say months, you're talking about riots, now the coronavirus. I mean, it's like you gotta stick the economy with some cash immediately to get people spending. People can't even get toilet paper there. It's quite a situation. So helicopter money, I mean, that's the
how did they spend it if they're
system, right?
quarantined?
Huh?
How did they spend it if they're quarantined?
On Amazon. So buy Amazon stock, basically.
Right. I mean, I don't know how prevalent Amazon is in Hong Kong. It's been 10 years since I've been there. So, but I don't know, but these are the measures that, might be taken. Anyway.
I think we'll see lockdowns in the US in major cities that have trains where the spreading could be pretty rapid. I think that could happen here this year.
It's quite possible. So,
you're
anyway.
okay in Phoenix. You don't have any trains.
No. Phoenix
Mass
is,
transit.
Fortunately, we have a lot of open space. It's just, you
drive. So, you can't
places.
spread it as much if you're in a commuter city where most people drive.
Right.
Anyway, that's what I read.
So this kind of what I'm seeing with the equities. I think they might, pop a little bit here, just a recovery, but don't expect any prolonged recovery. And I think you need to sell into any strength that we see. Just remember, the slowdown's real globally, and that is going to. Whether I think that the human race will be fine. I'm just think that the global economy will really come to a screeching halt. So therefore, you got to sell into strength if we get it. So that's what I'm hoping for. I'm hoping we get some, move back to 3,200, maybe 3,210 in the S&P, and look for, opportunities to sell into. Anyway, Steve, I'm going to let you handle all these questions that are coming in. But I want to say thanks, guys, for supporting us. Remember, if you are not a member of Forex Analytics, make sure you try us out. It's only $1 for 10 days, and then you can download the mobile app. It doesn't matter if you're using the premium or light version, you'll still get the full version while you're trying it out. And then also make sure you visit our webinar sponsor, which is Forest Park FX. And if you're looking for a broker best suited for your needs, they're the people to talk to. So just click on the link and you can go to our reimbursement program and talk to them directly. All right, I'm gonna pass it over to you guys. Have a great one, everyone, and I'll see you on the daily roundup in about 4 hours from now.
See you on the radio.
All right, see you guys.
Bye-bye,
Thanks, Blake. Thank you.
Hey,
Phil.
Hey, guys.
Hey,
so the story continues, obviously, and it's not going away. Donald Trump tweeted about the virus. Did you catch that? He called it the coronavirus. So, at least do your basic research before you tweet about something.
He's about to invent the vaccine, so it doesn't matter if he knows the name.
Corona. Fear that I'll own ya. Born in a lab in China, spreading so I'll find ya. No one is safe, not even a king, and I'll be the excuse for everything.
Nice. Yeah, so this thing is dominating. That's good, actually.
Yeah, I did that after a bong.
No comment.
All right, guys. Yeah.
So everything else is being dwarfed at the moment. This is everything. This the virus.
Yeah, indeed.
We had the first case in Greece, and it's going to be everywhere. So the question is, how do you prepare for it? How do you protect yourself? So, but like Blake said, the effects to the economy are going to be felt for months for sure. It's going to come. It's going to go. Everything's going to be back to normal at some point, but the economy is going to struggle a little bit, the global economy. And this is not the perfect time. Actually, it's one of the worst times to have this, because the global economy was already starting to turn lower, and this is really not helping.
The excuse for everything.
The excuse for everything, exactly. Central banks, we've been talking about this for years.
Might end up being the trigger, not the cause for sure, because there's a big difference between the cause and the trigger. The cause is this economy has already been propped twice by inflating different bubbles, because unfortunately the fundamentals of the economies are really bad and they're getting worse because politicians with the head of central bankers, instead of doing the right thing, they're doing the wrong thing. But
because now people realize the emperor has no clothes. So
something like that.
And you know what, Steve? I was thinking one way to be sure that you can avoid the coronavirus is to commit suicide.
Oh, come on. Come on, man. Okay, that was a joke. Let's just clarify.
Yeah, it was a joke. I'm not making fun. I'm not making fun of it. Yeah, weird, Courtney. You're right.
Okay, that was black.
All right, they're going to mute me now.
Yes. So yeah, I mean, my view on markets in general, I think we should be selling equity rallies. I really think, and I feel this market has changed character. This. I think from buy the dip, we're going to get to sell the rip mode for a while. I don't think the extent of the drop in equities. I mean, already the S&P is what, 10%. The DAX is 10% down, isn't it, or something like that?
The DAX at the lows of the day today was 10% down from the highs of last Thursday or whatever.
I personally don't think the trough is going to be. The drop is going to be huge, like 2008. People disagree with that. I think, but 25-30% correction is going to be very, very healthy, and I wouldn't be surprised at all to see it. So I am very, very light in stocks at the moment in my portfolio, and I think sell the rally is the way to go forward.
No, I agree with you. I mean, this move lower, I think, isn't done, but it might as well be done in the near term, because the reason I'm saying that is yesterday I mentioned at the end of the day that we closed at a confluence of supports. You can see this ascending trend line support that was also horizontal support area, and the fact that the market flashed lower today, it wasn't exactly flash, it didn't last seconds, but it didn't last more than like an hour or whatever it was, like half an hour or whatever it was. Pre-market, I like that for a bigger recovery when the market opens. So yeah, definitely with you. That's why I also closed completely this morning. I closed completely, both of my positions that I had short in the S&P. That was quite a nice trade, worked out nicely. And I'm looking to participate once again, but I want to see a reaction higher from here. Now, does that necessarily mean that it's going to happen? I mean, is it impossible for the market to, just shit the bed for a fifth consecutive day? No, it isn't impossible. But, I think that in the short term, the risk reward is not skewed to the downside anymore in the short term. So I would like to see a rebound towards like 32.10, even 32.50. And then I'm going to be actively looking to start building a short position once again. As you said, the DAX definitely, was the weakest one. I mean, at the lows of the day today, that was like a 10% from the highs. It's already recovering quite nicely from, an indicated support area that we had here. So I like Blake's idea. I mean, I don't really care if, initially it held there because, there was somebody supporting it or not. If you remember, I made it very clear yesterday that we had Greg as well with us, that, in order for me to be convinced that the USD yen is going to be moving lower, since, it already broke above a multi-year trend line resistance. I would want to see the USD yen, drop below 110 and close, a day below 110 again. So yesterday, that was vigorously defended, and definitely, if today we end up having a risk on recovery, I think that's going to help USD yen perhaps move even higher. We're still within this ascending channel as well, so I think that against 110, the risk reward would favor long positions here. Although, as I said yesterday, when we were on the way down, same applies to the way up. I don't think that USD yen is the best way you can actually play risk on, risk off. We've seen recently during the past few months that USD yen has responded less and less in, the risk on, risk off movement of the markets. I think that if you want to play risk on, risk off, you'd rather do it through the indices themselves and not through FX. In this case, at least, that's what I believe. Now, Nasdaq, more or less the same deal. We punched through that horizontal support area as well, and we actually tested this horizontal support area. As you see, areas here have been working quite nicely. We've seen from the highs to the lows, because Nasdaq did suffer a little bit more on the way down to the pre-market lows. We were actually almost 11% lower within a little bit more than 4 trading days. So that is a great example of what we've said multiple times. Up with the escalator, down with the elevator. It took the market. The market actually needed from January the 2nd, so from the start of the year, to February 20th, to rally that 11%, and the market took all that back within a little bit more than 4 days. So it was very clear that risk reward was just stupid. Being long up there, we kept saying that the VIX was sending very clear signals and indications. You can see here that the VIX exploded higher after retesting this broken triangles trend line resistance as support. Actually made it to 30. More or less 2 consecutive days it touched 30. Now it might pull back from here, but once again, I'm going to say here that I do think that any pullback in the VIX, I don't know if it's going to manage to close the gap that we left here. Is probably going to be a good opportunity to buy it once again for at least one more move higher, so one more move lower in the indices. Now, I would be much more optimistic that this bubble market can just resume higher following that, if it wasn't the fact that I still believe there is a big danger due to the US elections and the market having completely underpriced the possibility of somebody like Bernie Sanders being able to challenge Trump for the presidency. So I do stand up to what I said last week and reiterated yesterday, that if for some reason this coronavirus market event lasts for a little bit longer, then perhaps the market is going to start to have to price in at the same time, depending on the developments, in the Democratic Party's, elections. Perhaps the market will have to start pricing in, some probability of, Bernie Sanders' victory, even if that's initially like a 20% or a 30%, since, even Trump himself agrees that's going to be, a big market moving event. And more or less, I think that everybody agrees that, with whatever he's declaring, Bernie Sanders is going to be a very negative influence to the market's movement. I mean, he's even talked about, in essence, confiscating like 20% of, company stocks, which of course is unconstitutional. I don't think he's going to be able to do that even if he wants, but other stuff as well. He wants to increase taxes, etc. All that is definitely negative, for stock movement. So, if the market has to start pricing in such an event, that's definitely going to move the markets lower. Now, having to do with Euro USD, keep in mind, Gregor mentioned that yesterday, and I couldn't agree more. He said that Euro is testing resistance here, and I do agree. I mean, I think that as long as we stay below like 1093, Euro can actually turn to the downside. We've had quite a big move lower, and we might see continuation to the downside. So I wouldn't get very trigger happy with being long the euro here. I think the risk reward ratio probably favors a continuation lower as long as we stay below that zone anyhow. So I wouldn't be turning very optimistic about it. Although, as I've said, I think that the next big move in the euro can be to the upside. We're not there yet. Now, Blake also mentioned that the Aussie, keeps, moving lower. I wanted to just pinpoint that we have the 127% extension of that last rebound here. Now, let's see if we can actually break below it. If we do, I think that then the losses can be extended towards like 64.50. We have the 161.8% extension. Needless to say that, Aussie remains, very much under pressure. Same deal with Kiwi here. Kiwi is still riding this descending channel. Has now almost, completely retraced this whole rebound. We've retraced roughly like 80% of that rebound higher. We've started to see some divergences, but still, I wouldn't be betting that, this can really work out nicely. Because we never violated the downtrend, right? I mean, even that high there wasn't a higher high than the previous high, so we still have a series of lower highs, which is the very basic definition of a downtrend. So you have to keep respecting that. Now, having said that, I mentioned that earlier in the chat room, and having said that, yeah, they do remain weak. Against the euro, here is euro Aussie. Probably you need to start being a little bit careful here for two reasons. Reason number one, we're approaching once again this horizontal resistance area. We've had a very nice rebound higher, but we've now reached the zone that has rejected multiple times price action. Plus, the correlation between the euro Aussie and stocks are usually inverse. So if we do get, a risk rebound today, it is very likely that we're also going to get a rejection from these levels. Even if we actually, though, push above this resistance, you should then set your eyes in this channel trendline resistance. Keep in mind that this channel dates back to 2017, so it's a multi-year ascending channel. So even if we break above there, I think that the upside is rather limited. It's not that you can't make money until we actually reach that channel, but it's rather limited because I do think that this channel has actively played a role for so many years. So why not? It might do the trick once again. Euro Kiwi also has reached an interesting fib resistance. I mean, it's the 61.8, probably the most important fib resistance area. Also previous lows there, as you see. So we might get some type of reaction from here, but as with the euro Aussie, if the pair actually wants to continue higher, it still has some room to run until it can actually find this symmetrical triangles. This symmetrical triangle dates back to 2018 until it finds this symmetrical triangles resistance. So it's not that I'm saying that they're bound to get rejected, but I'm saying that both of them are actually testing some decent resistances, and in combination with the fact that I like what I've seen in the price action so far for a rebound, a 1-2 day rebound, I would be a little bit careful with those. Having said that, let's have a look at the Aussie yen and the Kiwi yen. I was actually contemplating yesterday in issuing a pattern in play in the Kiwi yen, and I'm going to show you why. Here they are. So here is the Aussie yen. Aussie yen broken below this pennant, retesting now this low, also 61.8% fib horizontal support resistance area. So let's see what happens from there. And here's the Kiwi yen. The Kiwi yen, actually yesterday I was contemplating in shorting this because, you know, it had this very nice range, and, you know, I strongly believe that, you know, a breakout from this range should extend. But on the other hand, you know, the USD yen was approaching the 110 area, and, you know, I didn't find it easy persuading myself being short, you know, a yen pair when USD yen was actually testing important support. So, you know, I might have done the wrong thing, but, you know, I'd rather stay away from a trade that does well than jump on a trade that I have doubts about and, you know, doesn't do well. So that doesn't mean that it still can't work, right? From a technical perspective, we still have, you know, clearly an event here. I mean, we had a range worth, like, it's almost a 2% range, right? 130 pips. And that can easily produce 130 pips of downside, which would point roughly to 68.50. So, you know, it is what it is. I mean, it's a legitimate breakdown. As I said, I was somewhat worried because I thought that USD yen is not going to help. So the yen part of the equation is not going to help. So it was all about if Kiwi can sell off enough to, you know, to help the pair move significantly to cover this range. Now, let me go through some of your questions because we have quite a few of them today. Good morning. Good morning. Question about crude.
Keith, I see you in the room, and we'll be getting started in about 13 minutes. Thank you. Thank you, Steve.
Crude clearly remains under pressure, right? I mean, I said that I believe that rebound was corrective in nature. I was expecting a failure anywhere between 54.50 and 55.50. We got rejected from like 54.40 or whatever it was. We've broken down below it. We've actually tested today lows that we hadn't seen since January 2019, when we were recovering from, you know, that move lower towards $42. So, you know, I'm extremely skeptical about crude. Yeah, if risk recovers, you know, today, crude likely isn't going to be following to new lows like right immediately. But, you know, do I have a positive outlook for crude? No, absolutely not. So, you know, it's hard for me to advocate to somebody to sell it today. I mean, I told you that, you know, this is likely a flag. So if you sold the breakdown, great. You have profit to, you know, to money manage now. But, you know, should you be selling today? Nah, I don't think the risk reward favors anymore selling down here. Okay, so as simple as that. Now, having to do with gold, gold's rebound today was an excellent opportunity to sell gold. Don't misunderstand me. I wouldn't be selling gold. I've explained that multiple times. I think that in the short term, gold might move lower, and this is actually what I drew in the chart. What was it, yesterday, the day before yesterday, or whatever it was, that I would expect this to unfold as, you know, a corrective move, likely towards 1610, 1590, 1610. I think it's a good area of support for gold to continue to the upside. So today's, you know, rebound was probably a nice opportunity to, you know, to look for a short-term trade lower. Personally, I don't want to be on the short-term, you know, side of gold going lower, because I'd rather be on the long-term side of gold going higher. And oppositely from what some people believe, yesterday I had a very interesting experience with one of your previous guests, Dale. He decided to block me because I question his thesis that gold is a bubble that burst. So obviously, I consider that, you know, a very strange thesis. I mean, you know, every technical analysis perspective is, you know, well respected, but, you know, every technical analyst knows that, you know, there is always more than one ways to skin a cat. There are always more than one counts, you know, irrespective of if that's, you know, an Elliott wave, you know, harmonics, or, you know, basic technical analysis formations. But, you know, calling gold a bubble is, you know, the least to say ridiculous, especially considering the amazing correlation between gold and central banks' balance sheets. And I think there isn't likely anybody out there that believes that central banks are about to start shrinking their balance sheets, because we have every indication to believe that central banks have just resumed, you know, unleashing more monetary hell, instead of doing the opposite. So I believe that for multiple reasons, but mainly that, gold is going to resume this explosive uptrend. Gold has already posted all-time highs against the vast majority of currencies. Dollar is likely one of the few exceptions, and I think that's not going to be for a long period of time. I think that eventually we're going to see an all-time high against dollar as well, formed from gold. So gold, I think, in a corrective move lower. Definitely silver underperforming. Silver formed likely here a little pennant, which we broke down from. So, you know, definitely doesn't look that healthy, especially in comparison to gold. I think we might see, you know, deeper corrections lower for gold, silver, platinum. By the way, we had a question about platinum yesterday, but I didn't have the time to cover it. Let me go on the daily chart and show you platinum. So platinum, I was mentioning that, you know, 950, 955, I said that for weeks, is an important pivot for platinum. And I don't consider it a coincidence that once platinum did break through 950, 955, it just, you know, the bottom fell off. So it, you know, it lost another like $30, like nobody's business immediately. You know, having said that, look at how many resistances are cluttering in a quite small area here. We have this ascending channel trendline resistance currently passing from like 9, let's say 13. We have that multi-year trendline resistance that is broken, passing from like 905. We have the 200 daily moving average currently being at 900 and, you know, slowly climbing higher. Bottom line, I think that, you know, roughly at 900, you know, the market might find a bid, and it might be quite a nice area to attempt being long platinum. So we had that question yesterday. I didn't have the time to cover it. So I think that was a great occasion to do so, since we were looking at the metals. I did cover the VIX, mate, so I'm not going to cover it again because we have more questions, but you can have a look at the recording later. I did cover the VIX. I think it can close the gap before moving higher again. Yeah, you guessed that right. That's Henrik Zemberg. Yes, yeah, exactly. And Jason, yeah, you're absolutely right. That was actually really funny. I mean, blocking me because he disagrees with me. Yeah, that was actually funny. He must have been really burned by gold. Really, really burned by gold. And they have no problem. You know, I mean, I strongly believe in gold because it has proved its value for 5,000 years in, you know, in holding its value. So, you know, gold is always the best refuge in in at least preserving, your purchasing power as a consumer. But I don't really understand why somebody can be that bearish as this guy is, and he's been wrong for so long that I bet he's just, very, very angry with himself. Silver have upside hand and head and shoulders, I guess you mean, from 8 September 19. Let me see what you're talking about. Do you mean an inverted head and shoulders formation? Can you help me a little bit? Do you mean like an inverted head and shoulders formation like that? Not sure, but definitely not something really clear. I can tell you one thing for sure. First area of support for silver is at 1775, and the next one you can be looking for is at 1740. Okay, so these two areas I would look for them to act as support. Now we have a question about copper. We had this discussion actually in the chat room yesterday. I was saying that, on one hand, copper is looking bearish, right? I mean, we had quite an impulsive move lower, a recovery that was clearly corrective, looked like a nice pennant. But on the other hand, I'm quite troubled by the fact that, we had quite a big sell-off in the markets. The epicenter of the problem was in China, and we know that, since China is the marginal buyer for copper, it's always very sensitive to China and Chinese news. And yet we have seen a very, very orderly move lower. So
maybe that's B, Steve, and we get a C.
Yeah. So despite having nothing really good to say about copper, looking at this chart, so I don't have like a bullish thesis here. On the other hand, as I said, I don't like the fact that it didn't respond in a stronger manner to the downside. So, I'd be careful here. Okay. Suffice it to say, I'd be careful. I mean, if you shorted the breakdown from that pennant, and you had every reason to do so, I bet you're scratching your head, and I would be doing the same. So, I would definitely at least be trailing my stop loss to break even here, and being quite careful. Having said that, look at Bitcoin. Quite a move lower, and especially Ethereum. Quite a strange behavior here, meaning, a lot of these people are trying to claim that Ethereum and Bitcoin are safe havens. And one of my biggest arguments has been, let's first see what they do during a recession, so at least we can have some evidence of a complete business cycle and, how they respond before we, start naming them like risk of assets, or at least like, capital preserving investments or whatever. So, risk has been moving lower, stocks have been selling off. Same seems to be happening with Bitcoin and Ethereum. Having said that, they're still in breakout territory. So, I wouldn't be just, rushing to sell them, but, I would be quite careful. Both of them testing support at the moment. You can see here, I mean, this is like the last bullish case scenario in the short term. If Ethereum manages to hold here, and if Bitcoin manages to hold there, you see both cases, we have some type of a flag. Fine. So, from a risk reward perspective, attempting to buy them here makes sense. Now, if they break lower, in the case of Bitcoin, I would expect this channel's trend line resistance, which is now broken, to be retested as support. Currently passes from like 8,400. For Ethereum, definitely the equivalent level is much, much lower. You would have to go all the way down to closer to 180 in order to find that support. Let me see. Question about Euro Yen. Sure, let me have a look at that as well. Okay, so Euro Yen, and let's start the interview following that. So here is Euro Yen. Got rejected once again, second time, from the 61.8 of the last move lower, and still remains below this broken channel. I remember I said, what was it, the start of the week, probably it was Monday, that, you know, as long as we remain below this broken channel, you know, if I had to choose a side, I would have to go with the bearish side. You know, so far it has worked out nicely, but I have to admit, you know, I wouldn't be participating in this yet. I think it's, you know, it's not that clean, right? So, you know, against this recent high, you know, you can still be looking lower, but personally, I would just stay out of this market, okay? There is also the chance that we're going to see something like this. I mean, even if we are to continue lower, we had, you know, quite a big move higher. We might retest this area support, move once again higher, go closer to the channel, and then resume lower. That's also a likely scenario here, okay? So, coach, if your guest is here, why not? You can
Okay,
take
buddy.
over.
Be careful out there, Steve.
Me?
Yeah.
Oh, I've done quite well these days, so I have no complaint. And you know,
No, I'm just saying, you know, but you know, be careful.
You mean
That's all.
coronavirus, etc.?
No, not Corona. Just, you know,
Okay.
in life, just be careful. Keith, I'm making you a panelist. Looking forward to talking to you. I think I unmuted you already. Maybe I screwed up here. Oh, there you are. Okay, Keith, you're unmuted.
Hey, what's going on, brother?
Hey, Keith, really great to meet you. I'm looking forward to having a conversation with you today. Do you want to share your screen?
All right.
Okay, so I'll wait for Steve to stop. And you'll see, you just hover your mouse over the drop-down menu, and you'll see a green share box. And you click that. You see it?
Oh, wait, hold on. 1 second.
Okay.
Yep, I got it.
Okay. So you click that and then choose the screen you want to use as the center of our discussion today. Unless you're just going to perform. Then we'll have you turn the video, your camera on. There you go. Okay, there's your setup. We got it, Keith. All right, so really nice to meet you. You know, I've seen you on Twitter for years now, and I think you noticed something that I did. And how did you end up with 186,000 followers?
Hold on,
From your music?
Can you hear me?
I can hear you. Can you hear me?
All right, I just wanted to change it because my account number was up there. So.
Oh yeah. Do you need my bank wire information?
No, you fixed it. I'm all set.
No, I mean for you to transfer some funds to me after the interview. Anyway, so so Keith,
you accept Bitcoin?
Huh?
You accept Bitcoin payment?
Yeah, I do. I'd like to have one, and I'll throw it in a jukebox. So you started off. Obviously, your passion is music, right?
Well,
so
my dad was a bar owner, so you know we had a couple jukeboxes in there. So I used to always get all the music, you know.
Okay. So you know what you call a guy who goes into a diner and with his fists he pounds the jukebox and it plays a song? You know what that's called? A Fonzie scheme.
Fonzie scheme. Okay.
All right. So
Fonzarelli, Happy Days.
Yeah. So tell us how you got into trading. I actually I listened to a couple of your tracks. Good stuff, man. So I know you were in music before you started gambling in the financial casino. How did it happen for you, the trading aspect of your life?
Well, I figured I wanted to start my own business, the right way. So what I did was I went in Barnes and Noble, went in the business section, checked out all the books, followed all the authors in there. And I figured, I'm the biggest pot smoker besides Snoop Dogg. So I ended up buying all the weed stocks I could find, as a hobby.
Interesting. Okay, so were you're buying them before they went public? Because there were a lot of 10 bangers out there a few years ago, weren't there?
Yeah, during the boom, I made a quick 4,000 or 5,000, and I was hooked, brother. So I was like,
okay.
oh.
All right. So it started with one idea that came out of a bong. I've had a few like that. In fact, I have a lyric for you for a rap song, but you'll have to cut me in on the royalties. You want to hear it?
Yeah, let me hear it, brother.
All right, it's about coronavirus. It's big, right?
Yes.
All right, so I mean, why not a rap song with this in it? Corona, fear that I'll own ya. Born in a lab in China, spreading so I'll find ya. No one is safe, not even a king, and I'll be the excuse for everything.
Okay.
All right, I'm in.
Bars for days. Bars on deck. You got bars on deck, brother.
All right, so these I see have a lot of different tickers up here. Are these all
we got to do some investment raps for real, brother.
Okay, so tell me what issues you look. What's APLE? What is it?
Oh, that's the REIT right there, the Apple REIT, man. I love it.
Okay,
it's down right now.
Okay, it's a REIT.
It dropped to a 52-week low right now.
Yeah. What do you think of this drop in the market? Do you think that we have a trend change or just a little mini panic?
It's blood in the streets, man. And you know what they say when there's blood in the streets, it's a buying opportunity, sir. So with this little drop in the REIT, the APLE, I'm not scared. I may buy the dip, but it's blood in the streets. So I still got to stay safe, though.
Okay, well, really the only way to stay safe is 90-day T-bills and cash. That's the most riskless investment position. And then you probably have currency risk down the road. So you a believer in the precious metals as a hedge for the economy, even if you're not price sensitive? How do you stay safe
All right.
in a twilight zone world?
You really want to know, Dale?
Yeah.
All right. I hedge with the Peter Lynch's Magellan Fund, as well as gold, and Ethereum. It's been doing good with the Qs, and I use the Qs as well. My favorite is SWPPX, though, the swap.
Okay. So are you day trading? What kind of time frame do you have? Multiple time frame strategies, or are you more of a day trading scalper type of trader?
I do it all. Wake up 4 in the morning, after hours trading,
Okay.
And
all right. So then let's get to, I saw on Twitter, you kind of developed some things that you feel comfortable about. You didn't develop them. There's nothing new under the sun. But talk to us about the bands that you're using and how you chose those types of bands to trade and how you execute based upon these bands.
I basically use the Fibonacci's, Bloomberg terminal. I could see the RSI with the SMA. Tell me when to get out.
Okay. So how does the RSI, that's really a big part of the body of my work is RSI. A lot of people use it just simply for saying whether a market is overbought, oversold? How do you use the RSI?
It's simple, you know, buy low, sell high.
Okay, so you're saying if we get like, do you automatically look to buy something if the reading is 20?
Excuse me?
What level on the RSI is a screaming buy to you? 30, 20? Do you need divergences to develop?
20, 20 all day, Dale.
You'll just buy things that are at 20. Have you bought things at 20 that maybe they improved, RSI maybe bounce back to 30 and
You gotta
then
watch
it,
You
go
gotta
ahead.
watch it, Dale. Everything's different, buddy.
Yeah. So teach me something today.
But it's a better opportunity to buy and
Okay.
make profit
Okay.
rather than the guys who bought at 70, brother.
Okay. So we just lost your screen. What happened?
I folded the laptop. Hold on.
Okay. Do you just trade for yourself? You teach other people to do it? Do you manage money? You have a business model, or it's just all your own stuff trading off Bloomberg?
I don't, but a buddy of mine does. And he helps me out.
Okay. Who's been your biggest influence in helping you learn how to be a technical trader?
Property management and J Profit, as well as you want to know like a podcast I follow or something, or
No, just, you know, I mean, you sound like you're self-taught, but did you have any mentors that helped you develop your trading style, or was it just a random walk for you?
I'm definitely self-taught. Yeah, random walk down Wall Street, Burt and Macchio. You know?
Okay. All right. So what's the worst landmine you've stepped on?
Oh my God, fucking all of them. All of them.
Okay. All right. So after you blew out an account or two, how were you able to?
Hey, or three or four, Dale. Let's get it right.
Okay. So you've blown out accounts. What was your self-talk after you blew out an account? Like, you know, maybe this isn't for me. How do I raise funds to do it again? What was your attitude after those experiences?
You know, like a guy told me, when you stop buying, when you find yourself in a hole, you stop digging, you know?
Yeah.
So I started buying all of the losers and selling all of the winners.
Okay. All right. So it's not a profit till you take it. Are you all in, all out on your trades, or do you scale in?
Like today, 10XP is going crazy.
All right. Well, why don't you share your screen again, Keith, so we could look at it and then tell us, go back to that green box.
Bought them after
Click it. Yeah. There you go. Okay. Now you're showing our launch page instead of your desktop.
Okay. I gotta click here. Open Zoom. Oh my God.
No, all you needed to do was share your screen. You don't have to open Zoom.
Okay.
All right, so the little green box drop-down menu. In fact, you know what, Keith? What I'm going to do is we'll get together and maybe rehearse for next time, and maybe have a little more preparation to share your journey with people. But before I let you go today, bro, what's the most important lesson that you want to pass on to other people that are going to attempt what you've attempted?
Don't do it. No, sir. Hey, never give up. Never give up, Dale. Rocky.
Yeah.
Rocky, you know, watch the Rocky movie. Never give up, baby boy.
It inspired me too, man. And you know, every one of us, and you know, thank you for your authenticity about that. You've blown out accounts. I've blown out that amount of accounts. So there are times in everyone's trading career where just like Rocky, you have to get up off the canvas. But you know, you're also right that there's nothing wrong with taking a break and reassessing when you've gone through a bad period, because the markets will be here when you're ready to step back into the arena.
All right.
All right. So Beef, stay safe. Good luck with the Corona song. And it was really a pleasure meeting you. I wish you a lot of good fortune this year in both your music career and your trading career.
I appreciate you, Dale. Yeah, next time when we go on, I have my my mentor with me, you know, Jay, so you get a way better interview, and we can see about these technicals, you know, because there's a little something going on right now, but I'll make sure everything's up to par, you know, next time, if there is a next time, Dale.
All right, buddy. We're all human. So you like it or not, you're my trading warrior brother.
Woo!
Yeah.
Yeah.
All right.
So, like Stephanie.
All right, buddy. We'll have a good trading day. And I always tell people this, and to people that are still here with me, don't just count your pips, count your blessings. Good hunting the rest of the day. And we'll see everyone tomorrow. I have Peter Bookvar, CNBC contributing editor, with us tomorrow. So thanks again, Keith.
Stay blessed, Dale. I really appreciate you for having me on, you know?
Thank you, buddy. Okay, everyone, adios. Catch you tomorrow.
All right, stay well.